Hello and welcome back. I am Moumita Pal, and in today's episode, we will be talking about all the important events from last week. Let us begin. IMF's World Economic Outlook was released last week. The global real GDP growth has been brought down from 3.6% to 3.2%. Moving to China, the Chinese government is considering bailing out the real estate sector. An estimated amount of $44 billion has been allocated for this. This money would be funneled through the state-owned banks to buy unfinished projects, and the government might then rent out some of the homes rather than selling them. Beijing is also making plans to increase its spending on public works. The amount is estimated to be around $1 trillion. The money will be financed with government borrowing quotas pulled forward from future years. Moving to Euro area, the GDP growth estimate for the second quarter was released last week. The number is 0.7%. This is higher than the consensus expectation of 0.2%. Euro area had positive growth in the first quarter as well. However, the gas supply from Russia continues to remain a big threat to economic growth. Gazprom, which is Russia's energy giant, supplies gas via the Nord Stream 1 pipeline. It has reduced the gas supply to Euro area by 20%. This has heightened the fears of recession in the Euro area. Moving to USA, US has entered a recession. The GDP fell by 0.9% in the second quarter. The GDP was negative in the first quarter as well. When an economy has negative GDP growth for 2 consecutive quarters, then the economy is said to be in recession. The major drag to GDP growth in the second quarter was the drag in private investments. The consumption spending could only partially offset the drag from the investments. Earlier in the week, the Federal Reserve increased the policy rate by 75 basis points. So now the US policy rate has increased to 2.25% in the past 4 months. The commentary signals that more rate hikes are likely in the coming months as well. The US is expected to take the policy rate to around 3.25 to 3.5% by the end of this year. The Fed chair has also hinted at another 75 basis point rate hike if inflation continues to remain high. Moving to India, earlier the Asian Development Bank had reduced India's GDP forecast to 7.2% for FY23. Last week, the IMF has released the World Economic Outlook. The IMF has reduced India's GDP growth to 7.4%. Earlier, the growth estimate was 8.2%. An interesting data point was released last week. FDI, or the foreign direct flows, in the last fiscal has touched 6.3 trillion rupees. It is a big jump from the previous fiscal. And most of this has gone to the manufacturing sector. FDI flows are not like the FII flows, which are unstable and can be taken out quickly. FDI flows are stable and it is likely to boost economic growth in the coming years. In the next week, the key event is RBI's monetary policy, which is scheduled for 3rd to 5th of August. The market expects that RBI is likely to increase the rates by anywhere between 35 to 50 basis points. Thank you for listening. I am Moumita Pal.